Hey, welcome to this video on trading multiple time frames. This is for Forex, swing trading, day trading, really anything. Multiple time frame trading is very popular and for good reason. I personally use it as well. But I want to make just one point in this video, but it's a really big one. It's a big mistake I see a lot of people making, and I think this can save you a lot of money. So here it is. In this particular situation, what I've got on my chart, I'm going to turn this off so that we don't move our charts around too much. So the multiple time frames I'm using in this particular example is a 5-minute chart on the right and a 60-minute chart on the left. Now, don't get caught up in what those exact intervals are or even what the exact market is. This would apply to any. So the principle is this. When you're using multiple time frames, and let's say in this example that we're going to use the 5 minutes or setup chart. In other words, we're looking for trade setups, price structures on the 5-minute to trade. And then we're going to look for confirmation on the 60-minute to confirm our trade on the long term. And that's a filter to keep us out of otherwise good-looking trades that would fail just if we based it on the 5-minute chart alone. Great concept, 100%. On board with it. I use it with every trade I take. So that part's all good. Here's the problem. The problem is when these two time intervals are too far apart. And I see a lot of people doing this, and it will really mess up your trading. So 5 minutes and 60 minutes. They're too far apart. In other words, just to make this very literal, for every bar here, that is a 5-minute bar. Well, we're going to have 12 of these bars. I need to say it the other way around. We're going to have 12 bars on the 5-minute chart for every 1 bar on the 60-minute chart. And what that means is this, you can think of it as being lagging, too lagging. I mean, seriously, 12 bars over here for every 1 bar there. How is this really helping you? It's not. In my trading, I want precision. I want accuracy, and there's too much play in it, if you will. And what I mean by play is this. Back when I was a youngin' and first started driving, I had to get a cheap old used car. So in that cheap old used car, there was a lot of play in the steering wheel, meaning I could turn it a certain number of degrees to the left or to the right, but that wouldn't turn the car. It was just the steering wheel was kind of loose. So there's no precision between me turning the steering wheel and the tires, the front tires actually turning. And that's what you've got here. So, you got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 bars over here on the short-term chart and only 1 bar over here. I mean, what is that really telling you? Not much. Let's look at a couple of examples. Let me really flesh this out for you. So, bring up my global crosshairs. Now you could use, actually, before I do that, let me show you what we got over here. So, and you can use whatever indicators you want, price patterns, whatever. Just a general principle that you would apply to anything. So here in the 60-minute chart, we've got some choices. We could use as our confirmation the 50 MA. That's this. And it's angling down. We could say, okay, when the 50 MA is angling down, I'm only going to go short. Or we could use price bar structures. Or we could use something like this, the stochastic, say %D on the stochastic, which is this green line, or the MACD, which is this green line. So different choices. Again, these details are not the important part. The important part is that whatever you use on the longer term chart is going to be too slow of a confirmation to provide you pinpoint accuracy in your trading. So let's say, for example, that, and now I'll bring up my crosshairs so that you can really match one chart with the other. All right, got our global crosshairs on there. So you can see here, let's say that we're looking to buy this. We got to move down. Well, actually, let's say we're going to go short there. What the heck? We'll do a couple different examples. Now, if we're looking at the stochastic or the MACD, they're angling up. So they would be filters to keep us out of shorting a 1, 2, 3, 4, 5 move down. On the other hand, if we're using the 50 MA to angle down, this angling down, then that would confirm this trade. So depending on which indicator you're using, one would confirm, one would not. All right, so in this case, the 50 I'm angling down does. The other indicators do not. Now, if we're going to go along here again, we get a nice pattern going up. Boom, 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 boom. And what happens? Now the opposite. The 50 MA would keep us out of the trade as a filter because it's still angling down. But now the stochastic and the MACD would actually be a confirmation up. So one works one way, one works the other way. The whole problem is there's no consistency. In trading, we need consistency, that we use that same thing in every trade to confirm the trade on the shorter term chart. And we don't have it. It's a mess because it's too slow. They're all slow because the time frame's too slow. It's not tightly correlated, that 60-minute time frame. That's a 1 to 12 ratio between the 5-minute chart and the 60-minute chart. And so it's just random. Even the price bars, by the way, if you look at the price bars over here on the 60-minute chart, look, 1, 2, 3, they're all just kind of going sideways, right? Not much, but look at all the action that happens here on these swings on the 5-minute chart. So again, assuming you're going to trade 5-minute chart, just take little, scalps here and there, not going to help you. Now, if that's not your style of trading, great, then you wouldn't do that. But that's why I say, the point here is, even if you're using a longer term chart, daily chart, weekly chart, well, more than like a 60-minute chart, your setup, to use a 1 to 12 ratio, whatever it is, on the next higher time frame, just way too slow to the party. Way too slow. And provide you zero assistance, no precision. In fact, just as another quick example, let's say that you were using the faster indicator like the MACD here. And so the MACD on the 60-minute chart's angling up, and you're like, cool, we've got a little swing low here. I'm going to buy that. You could even do something like 1, 2, 3. Okay, I'm going to buy. Oh, wait, and then it goes down one more. This is going against, this little leg here is going against the percent D on stochastic. It's going against the MACD on the long-term time frame, and it would stop you out if you bought here. Why? No precision. It's not tightly correlated enough. So what's the answer? Well, for me, I like to use a 1 to 3 ratio. 1 to 3 ratio, not 1 to 12, 1, 2, 3. More tightly correlated so I get faster signals on the longer term confirmation chart. So to be real specific about that, if I was going to use, and I rarely trade a 5-minute chart, by the way, that's why I say these are just examples. So it's about the ratio. Whatever time frame you're trading, I like to use a 1 to 3 ratio. So if I was going to trade a 5-minute chart, then I would use a 15-minute chart as the higher time frame. 5 times 3 is 15. If you're going to use 3 time frames, then my next higher time frame would be 15 times 3, which would be a 45. So then I'd use a 5, a 15, and a 45. 1 to 4 is okay. I've tested this, and 1 to 4 is fine. Anything more than that, no good. 1 to 5 ratio, that's where it gets out of sync. That's where it's too slow of a confirmation and does not help you and causes you to get stopped out too often and does not provide enough precision. So that's it. Hey, if you have any comments on this, your opinions, whatever, feel free to put them in the comments below. I'd love to hear them. I'm always interested in your feedback. And I've got my rubber band trade strategy available for you that I give away absolutely free. Now that is actually a complete trading method. Comes with rules, the filters, entries, exits, trailing stops, everything. And I give that away for free. So there's a link that you can access in the description below. Or if you're on YouTube, click the little eye with a circle around it in the top right-hand corner. Either way, it'll take you to a page where you can get the rubber band trade strategy, my gift to you. And the whole goal of that is to get you start making some money right away without having to pay anything up front. So obviously, please demo test it, simulate test it. If you have any questions about it, let me know, and I'll be happy to walk you through it as well. Okay, my friends, well, have a great day. Hope you enjoyed this video. Share it with others if you like it. Always share good things with good people. That's what I'm trying to do with you.